Damn, Ben, can Blockworks pull on the firepower or what?
Yeah, quite a moment.
I mean,
Seeing
the President of the United States, it's unbelievable.
the first sitting president to address a crypto conference. So what a moment. It's a privilege for me to share the stage with Algorand Foundation CEO Staci Warden.
Almost like the President of the United States.
Exactly.
Just almost.
This has become quite a coveted time slot here on this Thursday morning. First, if we could just get a brief introduction, if you could briefly introduce yourself and just kind of share, where you were before jumping into leading the Algorand Foundation.
Yeah, I spent a lot of my career in traditional finance. I was at JP Morgan for 8 years. I worked for Mike Milken for 8 years. I worked in the Treasury Department. I ran the microcap markets for the NASDAQ for a number of years. So I have been in and around traditional finance for my entire career. I got interested in Bitcoin in 2013. I thought it was really a solution I worked a lot in emerging markets in developing countries, so I thought it was a very important solution to some of the issues that they face, and kind of never looked back. And the thing about crypto, it's a one-way street. You get on it, and you keep going further, and you never go back to traditional finance.
Yeah, and we'll get into as many topics as we can in the next 18 minutes or so, but first, we just saw President Trump address this conference. Wanted to get your initial thoughts on, those remarks and how you kind of expect this administration could help spur blockchain adoption.
Yeah, well, the main takeaway for me, and I don't know if you caught it because he did mumble the word just a tiny bit, but the Bitcoin algo strategic reserve was very important, I think, thing that he said. They're going to call it the AB reserve, algo and Bitcoin. No, look, he, make Algorand great again. He wears that hat all the time, so he cares a lot about my blockchain, of course. But he did say, and he always says about making America first, and not just in crypto, but in everything. But it's just after the, as Mark Andreessen said, the foot on your neck, right? Like that we've had for the last 4 years to have, from the very highest levels of government, encouragement and support. And frankly, we don't even need, directive support. We just need to, not be hampered, right? Like we have the deepest, most liquid financial markets in the world. If we could just have a level playing field, we can definitely compete globally in the United States. So, of course, I was like the rest of the audience here, very heartened to hear those remarks and how he's prioritizing the sector.
Yeah, and I remember chatting with you 3 years ago when you took over.
That was a long time ago.
Yeah. And now on the inside of this industry, how do you kind of see blockchain tech fitting into TradFi systems, opposing them as we kind of look to build this future-proof financial system? Yeah, I mean, I don't think in a future-proof financial system they're going to be opposed at all. But when you look at the financial markets, they look like crochet. They're beautiful on one side, very seamless. But if you turn it over, there's all kinds of just nonsense going on in the back office. And crypto and fintech tries to make that front side even better, but there's still all of this nonsense going on in the back. And crypto is very different than that. It is not a liability-based framework. It is, a bearer-based framework. It is actually digital cash. And a lot falls out of a framework like that can really help traditional financial systems and make them work better. For me, I think there's the big six, which I can just kind of rattle through. First of all, it will help with back office incredibly. If you are just writing to one ledger as opposed to having different kinds of, even internally in one institution, different kinds of balance sheets, talking to each other and constantly reconciling. Just have one ledger. You can get rid of intermediaries. I mean, if you look at just the most basic mortgage securitization vehicle, there are so many intermediaries in this. It's basically you set up a vehicle and then you get the mortgage payments, the principal payments, and the interest payments come in, and you have to divvy them out according to your waterfall. But, no offense to the calculation agents in the room, no offense to the paying agents in the room, all of this can be done in code. I mean, it's just really can be done with smart contracts. So. And these, just a mortgage securitization vehicle takes, 30 or 40 basis points, right? This is, 3 or 4 basis points. This is $30,000 or $40,000 on $1 million loan, right? So just the savings in that can be really profound, I think. And then I think the third thing is composability. Like everybody in this audience knows about DeFi composability. We talk about it all the time. But there's other aspects to it which are also quite important, like the ability to
just embed finance in anything. You know, a company building on Algorand called Ultrade, you can basically build a DEX. They can white label a DEX for you that you can put in whatever platform you have, right? You can think about identity as a composable framework, Ben. Like imagine not having to KYC for every single financial, counterpart that you, imagine being in a bank and not having to do KYC over and over and over. Imagine banks being able to share KYC framework, like stuff like this is, and then of course, I think this is like number 4 on my list, you can, tokenization, we've talked a lot about that in this conference, you can create markets that didn't exist before, you can bring liquidity to markets that weren't, that didn't have liquidity before. We have a number of different examples of that in rental income, for example, where you and I are not going to buy an apartment building to get rental income. But that's a very good diversified source of investment income. And so now, with a company building on Algorand called Lofty AI, you can, and it happens daily because this is Web3, you can buy just for $50 a portion of a rental building or a property of some kind, right? Markets that didn't, a company building on Algorand has created a secondary market in airline tickets, for example. Like you don't have that kind of thing without Web3, right? And then last, Ben, all of this can be yours 24/7, 365 days a year. It doesn't, we think in Web3, we think it's cute that you like wait for the opening bell in TradFi, right? Like all of this, your ability to move money 24/7, it's going to help finance. Like financial traders, they make sure that they're, so electrons are not disadvantaged. They have cables on the New York Stock Exchange to make sure they're not one is like even a tiny little bit further away from the other. But then they take the entire weekend off, and stop at 4 o'clock. It's ridiculous.
Right. And you mentioned tokenization. We've heard a lot of talk at this conference about tokenized real world assets, stable coins. So we'd just love to hear, blockchain adoption is going to come down to utility, and we've seen some gaining steam. These tokenized money market funds. There's one available on Algorand.
Aberdeen money market fund.
Yes, yeah. BlackRock and Franklin Templeton have their versions of it as well. Yeah. So just curious of your thoughts on the utility of those, how you expect those to be used going forward, and kind of how they might interact with stable coins in the future.
Yeah, I will say, and you wrote a very nice article about this just the other day, but I will say that tokenization cannot exist without stable coins. Like they are one and the same thing. Because if you have tokenized the asset side, but you haven't tokenized the money side, it just doesn't work. You're not going to, the whole thing that Web3 gets you, what we did with Aberdeen is it gets you an atomic swap. So what we did with Aberdeen is we tokenized a money market fund, and then a company named Quantos, who's a MiCA compliant, regulated by the Dutch Central Bank, programmable euro. It's actually not a stable coin, it's a programmable euro, digital euro. What is interesting about this is the fact that you can trade instantly, where clearing is settlement. You can trade instantly a tiny sliver of that Aberdeen money market fund for a digital euro, and you're done. And so if one leg of that trade is missing, you don't have anything, right? So they don't compete so much as they, I think, are essential together to get the real benefit of Web3.
Right. And we've also heard about the debate of what shouldn't be tokenized potentially. So would be curious to hear just from your experience, maybe assets tokenized on Algorand with little volume, and how you kind of expect some of those to evolve over time.
Yeah, well, what I think is super interesting about entrepreneurs is that they always find a way, right? So a company called TravelX tokenizes airline tickets, and the relationship with your airline is terrible. You want to return your ticket back, and you can only fly in the year. You get all kinds of penalties, and so they had this idea. Why don't we create a secondary market in airline tickets you can sell to somebody else? Okay, well this is and you can, if you're a frequent flyer, you can also, give your lounge pass if you want to this person, right? And so, you can imagine you're going to college and you buy your ticket home for Thanksgiving for 4 years to save money, but you don't actually want to go home 1 year, blah, blah, you can sell it. Well, this market is not going to be very liquid. Like the number of people that want to buy my exact airline route on my exact day, it's going to be a limited number. This is not a deeply liquid market by any means, but The airlines, I used to always get asked, do the airlines like this or hate this? But it turns out the airlines just love this because they think of it now as a very easy way to take airline tickets back if they want. So your mother lives in Cincinnati and you are like a very good son. You bought a ticket way in advance to go to her birthday in Cincinnati. But you know, it turns out that your mother decided to go off with her girlfriends and do something like in the Bahamas, and Taylor Swift is doing a concert in Cincinnati that weekend. Well, it benefits everybody. You sell your ticket back because you don't need to go, and then that airline is going to turn around and sell that ticket for 5x because somebody wants to go to that Taylor Swift concert, right? So it's just making these markets a bit more efficient, even though the underlying market is not that. You know, a very interesting project we have going on in Italy with Enel. It's the second biggest utility in the world, tokenizing solar credits, right? So it's the kind of the same thing. Why can't you get, and this is only enabled again in Web3, why can't you avail yourself of solar credits, right? What if you live in Ireland where it rains all the time? What if you live in an apartment building and you're on the 4th floor and you don't have access to the roof? You can buy an Enel solar panel, and that solar panel can be off in the field, somewhere where it's sunny all the time, and where Enel gets huge economies of scale because it's better to build a lot of solar panels together in one field than it is to put them on like one solar panel on one roof all over. And so, you know, maybe the market for trading solar credits is not going to be that liquid, but it's still critical to have that tokenization because Enel, you can sell back to Enel if you don't use, you know, all of your energy, you can sell back to Enel. It's tokenized, so it's just it's a very efficient way to do things, even when the market's not that liquid.
Yeah, and shout out to my mom in Cincinnati.
Yeah.
So you've told me that, you know, the tokenization can be the easy side. The tech side of tokenization can be the easy part. The regulatory hurdles might be the more difficult part for people looking to get into this space. So what might be some of the main hurdles for the players looking to get into tokenization and how they're kind of handling that?
Yeah, I mean, I think it comes down to the same things we've talked about for 3 days. So there've been some very good regulatory panels at this conference, I will say. You know, there is this idea of, even though regulatory certainty is getting better everywhere, you know, in the US thanks to the Trump administration, but Europe and the UK and Japan have all made great strides, the UAE. But regulatory harmonization, I don't think we're still there, right? And so these things move so fast that you do need some harmonization globally, and we're working on that. So I think that's quite important. I also think that the good things for consumers about Web3 is just how fast you can move your money, right? But from a regulator's point of view and from a bank, you know, an institutional point of view, the ability that somebody can pull money out very quickly, we saw this with Silicon Valley Bank, right? That's terrifying, and that's also problematic for financial stability, potentially, global macro financial stability. So those are the kinds of things you have to kind of figure out. You got to make sure that your advances over here in crypto don't lead to unintended consequences over here, right? But I do think, though, that we have gotten a little bit of a bad rap from regulation, because the bottom line for me and for, you know, people in this audience is that crypto can enforce regulation. You know, smart contracts can enforce KYC. On Algorand, you turn everybody off. It's at the protocol level. You turn everybody off and you whitelist them one by one by one. It's very easy to do, but you have that kind of granular control. On Algorand, you can embed in the token, because we don't have like a smart contract layer, like a kind of an Ethereum model. It's all assets are in the base layer. You can turn on and off an asset. You can have a clawback feature in the assets. You can kind of whitelist within the asset. Now, before anybody freaks out, once you declare that you can withdraw, that you're not going to be able to claw back the token, you can't change your mind later. But you know up front, this token might be clawed back, or it might not have the ability to do that. So my point is that Web3 gives you the tools to enforce sensible regulation much more than traditional finance does. So the regulators, I think, should be taking a much more benign view of Web3, and I think they will continue to do that.
Yeah, and so just kind of a follow-up on that, what will it take for more traditional institutions to move on chain? You talk about some of the the regulatory things you might be watching. We heard President Trump talk about calling on Congress to pass a stablecoin bill. So how do you think that kind of all works together to boost adoption there?
I mean, the bad thing about traditional finance is that they protect turf, like everybody does. The good thing about traditional finance, though, is that they love money.
Yeah.
You know, and so we are going to lead, I think, probably with cost savings and better customer experience. And stablecoin legislation is going to be key to that. So I really hope we can get that done. The problem, though, even for the willing, besides like convincing upper management and all of that kind of stuff that they've been going through, and this point has been made in the past on this conference, but the hard part is kind of almost over now. We're in the hard part now. It will get easier going forward. But the idea with finance, though, it's very hard. It's so interconnected. It's very hard for one mover to move first. And so we have to reach a tipping point where everybody moves, because they're all these balance sheets, as I said earlier, they're all talking to each other. So I think we're a little bit like in this period now where we all have to kind of move forward together. That's going to be tricky. That's not easy to do.
Yeah, and we have a few minutes left. Would just love to kind of hear your thoughts on, maybe 5-10 years down the road. What sort of world are you envisioning in terms of how blockchain tech, tokenized assets are kind of integrated into everyday life?
Everyday life. Well, I think, first of all, the customer experience will be much more like their traditional finance experience. This, 24-word mnemonic or 12-word mnemonic, and the scariness of you're going to be able to pick to be much more easily in a custodial environment or a much more friendly, Web3 environment, self-custody environment, and we will find things in between. So we're a proud member of the DREC Alliance with Cardano and Hedera and a number of others, where we're it's a little bit not quite custodial, and it's a little bit like not quite your, not your keys, not your coin, but we share keys, and it's a kind of a multi-sig approach. It's pretty interesting. So the industry keeps coming up with these new innovations, but I will say that what I think will happen is that traditional finance, every player will get tired and will no longer tolerate that their money is just sitting there doing nothing. This will not be acceptable anymore. When you hold collateral with your bank, and your bank is, of course, earning money on your collateral, but you're not earning money on your collateral, your initial margin, your variation margin, all of that, putting the ability to embed yield and with quick transferability, that combination is incredibly potent. And so I'll give you just one kind of far out example of that is I will take my Aberdeen money market fund, which is yield bearing, and I will go to your coffee shop and I will buy a cup of coffee with my tiniest sliver of my Aberdeen money market fund, and I will be earning yield until I hand this to you, at which point you will be earning yield on this little tiny piece. So, cash is an asset, apartment building is an asset, they're all assets. This continuum will get just completely blurred and more liquid, I think. That's my futuristic prediction.
Yeah, and what might hold that up?
I think what could hold that up again is this. The coffee shop has to be able to take it. I have to be able to give it. There's just a lot of coordination in the beginning for this. But then once you get to this tipping point, then it will be explosive, right? I mean, you and I didn't imagine when we had our first interview that we'd even be here. That we'd even be here right now.
Right.
And so when we talk again, when I talk after the president again in 3 years from now, we're going to be talking about stuff that we didn't even think we would be talking about here, right? But it just we just have to kind of keep. We do a lot of work on education, a lot of work on global education. We are doing, payments into Afghanistan and now into Syria. And I think that these countries are also going to kind of leapfrog the traditional markets that we know in the West and the United States, because they get it. They understand that with digital payment, they don't have to wait in a super long line to get aid payments, right? They know that they can hold value in in the US dollar instead of in their depreciating, highly inflationary currency, right? Aid agencies know that if they don't want payments to go to the Taliban, if they track those payments on chain, they can know that, and they can represent that to their own regulators. All of this, like, it's going to be a combination, I think, of entrenched players moving forward and the outsiders leapfrogging as well, and that's how we'll get to the promised land.
Yeah, thanks so much, Staci. Look forward to seeing who your next opening act is.
Okay.
The president today, who knows tomorrow, and we have a great lineup of speakers coming up next. So thanks
All right,
so much.
thank you so much.